Today, we're going to talk about an investment tool that has removed key traditional limits from investing. For decades, best investments were not accessible to everyday investors. If you wanted to invest in art, you needed serious capital and connections. If you wanted to build a real estate portfolio, you needed hundreds of thousands, sometimes millions. If you believed in a startup or a new technology, you had to be a venture capitalist or no one. That world has changed. Imagine you're an expert in art and luxury goods. You understand which artists are undervalued, which watches are collectible, and which wine vintages have long-term potential. In the past, acting on that knowledge required a fortune. Today, through crowdfunding, you can own a fraction of high-value assets, starting from just a few €100 and benefit from their potential appreciation. Or maybe your goal is to build a diversified real estate portfolio. Traditionally, that meant either buying an entire property yourself or investing through a fund with high minimums and ongoing fees. Now you can invest a few €100 per project and build exposure across multiple properties. Rental apartments in Spain, residential developments in Germany, commercial buildings in France, all digitally, transparently, and often with clearly defined returns. Maybe you have deep expertise in a specific industry. You understand clean tech, food innovation, fintech, or healthcare. You don't just want to observe the market, you want to participate in it. Crowdfunding allows you to invest directly in startups and growing businesses shaping those industries. You become more than a spectator, you become part of the growth story. All of this is possible thanks to crowdfunding. The idea behind crowdfunding is actually very simple. Instead of raising capital only from banks, investment funds, or large institutions, project owners and businesses raise money from people. Many individuals invest smaller amounts, and together they finance larger projects. As with most investments, there are two main ways this works. You can buy equity, meaning you own a share of a company or project and benefit if it grows in value or generates profits. Or you can lend money, providing a loan to a project or business and earning fixed interest over a defined period, with your capital returned at maturity. Everything happens through specialized online platforms. These platforms evaluate projects, perform due diligence, handle the legal documentation, and manage payment flows. Many operate under licenses and regulatory frameworks that increase transparency and reduce operational risk. While no investment is risk-free, the structure is designed to make the process accessible and understandable. Now let's look at the opportunities this opens up for everyday investors. Renewable energy crowdfunding has grown rapidly in recent years. Investors help finance solar parks, wind farms, and other green infrastructure projects, often earning returns in the range of 7 to 9% annually. In many cases, local residents co-finance energy projects in their own regions, directly supporting the green transition while earning income. Startup crowdfunding is another major area. Hundreds of early-stage companies raise capital from their communities, customers, and industry believers. While startup investing carries higher risk, successful cases can generate substantial returns when companies scale or are acquired. Real estate is one of the largest segments of crowdfunding in Europe. Investors can build diversified property exposure without needing millions. From short-term development loans to income-generating rental projects, opportunities span countries, risk levels, and time horizons. If you're interested in more alternative assets, crowdfunding also includes rare wine, luxury cars, collectible watches, art, and even trading cards. What was once a playground for the ultra-wealthy is now accessible to smaller investors through fractional ownership. For those looking for shorter-term and more predictable returns, there are opportunities in business invoice financing and debt securities, where maturities can be just a few months and returns can reach double digits depending on risk. But beyond returns and diversification, there is something even more important. With crowdfunding, your investment truly matters. You are not just buying a stock in a multinational corporation without knowing what your money supports. You are financing a specific project, a solar farm being built, a residential building under development, a local business expanding production. You can see where your capital goes and how it creates value in the real economy. Of course, with hundreds of platforms across Europe and thousands of projects available, navigating this landscape can feel overwhelming. Different countries, different models, different risk profiles. It's not always easy to compare and evaluate. That's why CrowdInform exists. On CrowdInform, you can explore more than 500 European crowdfunding platforms in one place. You can filter them by investment type, risk level, expected return, and key features. You can read structured reviews and understand how each platform works before you commit capital. We also aggregate top crowdfunding projects and use carefully designed AI analysis to provide clear overviews. And if you still have questions, you can ask them directly through the AI tool on CrowdInform and get answers quickly and in context. Instead of visiting 10 different platforms and analyzing hundreds of separate projects, you can find everything in one place. Crowdfunding has opened the door to investment freedom. It allows everyday investors to access real assets, diversify intelligently, and participate directly in economic growth. And with the right information and tools, that freedom becomes powerful. Investing is no longer limited to institutions. It's open, it's digital, and it's accessible. The question is no longer whether you can participate. The question is what you choose to build.